An executive order on the government's oversight of cryptocurrencies has been signed by Vice President Joe Biden. The order requests that the Federal Reserve investigate whether or not the institution should develop its own form of digital currency. Consequently, what does this investigation suggest? Let's find out. Hey guys, we would like to welcome you to Billionaire Crypto Investor. In today's video, we are going to discuss Joe Biden's signing of order on cryptocurrency. Therefore, if you want to avoid missing out on any of this information, stick around until the very end of this video. However, before we continue, please ensure that you have subscribed to our channel and clicked on the bell icon. This will ensure that you do not miss any of the wonderful videos that we upload in the future. And let's get started. On Wednesday, Vice President Joe Biden signed an executive order on the government's oversight of cryptocurrencies. The order urges the Federal Reserve to investigate whether or not the central bank should get involved and create its own digital currency. Biden was the first vice president to sign such an order. Janet Yellen, the Secretary of the Treasury, stated that the effort would promote a financial system that is more equitable, more inclusive, and more efficient, while simultaneously combating illegal financing and preventing threats to the country's financial stability and national security. A senior administration official who previewed the order on Tuesday under the condition of anonymity and according to the terms set by the White House, said that the administration of Vice President Joe Biden sees the meteoric rise in popularity of cryptocurrencies like Bitcoin and Ethereum as an opportunity to investigate the potential downsides and upsides of digital assets. As part of the executive order, Vice President Biden issued a directive to the Department of the Treasury and other federal agencies to investigate how the use of cryptocurrencies affects the nation's financial stability and security. According to top economic advisor Brian Dees and top national security advisor Jake Sullivan, respectively, Vice President Joe Biden's executive order will establish the first comprehensive federal digital asset strategy for the United States. That will help position the U.S. to keep playing a leading role in the innovation and governance of the digital assets ecosystem at home and abroad, Dees and Sullivan said in a joint statement on Wednesday. It will help position the U.S. to keep playing a leading role in the innovation and governance of the digital assets ecosystem at home and abroad in a way that protects consumers, is consistent with our democratic values, and advances U.S. global competitiveness. The move comes at a time when lawmakers and administration officials are increasingly expressing concern that Russia may be using cryptocurrency to avoid the impact of sanctions imposed on its banks, oligarchs, and oil industry as a result of its invasion of Ukraine. The sanctions were imposed as a direct result of Russia's decision to invade Ukraine. Elizabeth Warren, Mark Warner, and Jack Reed, three Democratic senators, sent a letter to the Treasury Department last week requesting information on how the department plans to prevent the use of cryptocurrencies as a means of evading sanctions. The administration of Vice President Joe Biden has argued that Russia will not be able to compensate for the loss of business in the United States and Europe by turning to cryptocurrency. Officials have stated that the Democratic president's order had been in the works for several months prior to the invasion of Ukraine by Vladimir Putin of Russia, which occurred 1 month ago. During an interview on Wednesday with CNN, Dalip Singh, who serves as a deputy national security and economic advisor to Vice President Biden, stated that cryptocurrencies do not provide a way around our sanctions. The financial industry, cryptocurrency traders and speculators, as well as lawmakers who have likened the cryptocurrency market to the Wild West, have been waiting with bated breath for the executive order to be issued. According to the government, surveys show that approximately 16% of adult Americans, or 40 million people, have invested in cryptocurrencies despite the risks. In addition, 43% of men between the ages of 18 and 29 have invested their money in cryptocurrency. The CEO of Coinbase Global Incorporated, the largest cryptocurrency exchange in the United States, recently stated that the company had not observed a recent uptick in the number of people attempting to circumvent sanctions using their platform. Last week, Treasury Secretary Janet Yellen stated that many participants in the cryptocurrency networks are subject to anti-money laundering sanctions and that the industry is not compliant with anti-money laundering regulations, entirely one in which things can be sidestepped or avoided. Concerning the possibility of the Federal Reserve becoming involved with digital assets, the institution published a paper in January stating that a digital currency would be able to meet the requirements of the country most effectively if it were based on a model in which financial institutions or payment processing companies were responsible for the creation of accounts or digital wallets. Some people involved in the cryptocurrency market are excited about the prospect of increased government involvement with crypto. According to Adam Zarazinski, Chief Executive Officer of Inca Digital, a crypto data company that does work for several federal agencies, the opportunity to provide new approaches to finance has recently become available. According to the White House, over 100 countries have already begun or are in the process of piloting their own digital sovereign currency. Zarazinski stated that the United States of America has an interest in the expansion of financial innovation. He also mentioned that China and Russia were investigating cryptocurrencies and developing their own national currencies. According to Catherine Dowling, General Counsel for Bitwise Asset Management, a firm that manages cryptocurrency assets, an executive order that provides more legal clarity on how the government oversees cryptocurrencies would be beneficial for the industry in the long term. But Hillary Allen, a professor of financial regulation at American University, warned against embracing cryptocurrencies too hastily. She cautioned against moving too quickly. She stated that she believes cryptocurrency is one area in which we ought to slow down the progression of this innovation until it can be better comprehended. As cryptocurrency becomes increasingly integrated into our financial system, it creates vulnerabilities not just for those who invest in cryptocurrency, but for everyone who participates in our economy. These vulnerabilities are not limited to those who invest in cryptocurrency. On Tuesday, the Department of the Treasury announced that its financial literacy arm would work to develop materials that are user-friendly for consumers to assist people. Judicious decision-making regarding digital assets is required. According to Nellie Liang, the Undersecretary for Domestic Finance, history has demonstrated that various forms of private money have the potential to pose risks to consumers as well as the financial system if adequate safeguards are not in place. This is the opinion of Nellie Liang. On Wednesday, Vice President Biden issued an executive order regarding the topic, which led to an increase in the price of Bitcoin as well as related stock prices. The price of a single Bitcoin had increased by 9.8% to $42,211, as reported by CoinDesk. Shares of the online brokerage Robinhood Markets increased by 4.5%, while shares of the cryptocurrency exchange Coinbase Global skyrocketed by 9.3% during the middle of a trading day. Riot Blockchain, a company that mines cryptocurrencies, saw an increase in its share price of 11.5%. In addition to this, there was a rise of the number of digital payment platforms. PayPal's share price went up by 4.9%, while Block's rose 10.55%. According to Nellie Liang, the Undersecretary for Domestic Finance, history has shown that various forms of private money have the potential to pose risks to consumers as well as the financial system if adequate safeguards are not in place. And with that, I'll see you all tomorrow. We sincerely hope that you had a good time watching the video. If this is the case, we ask that you click the like button and then forward this information to your loved ones and friends. If you have any questions or comments, feel free to leave them in the space provided below for them to be shared with us. In addition, make sure that you subscribe to our channel on YouTube so that you can watch even more of our amazing videos. You may also view some of our other videos that have been hand-picked to cater specifically to your interests. In the following video, we'll get caught up on everything.